Thank you everybody again for being generous with your time and joining us. So the reason for this webinar, as I mentioned to people who joined earlier, was the challenge that marketing teams have with fund distribution teams. And the challenges is that a bit like the COVID test that I ran, which is I thought if the line is C and it's a red line, it means COVID. But when I gave it to my wife, who's a biologist, she looked at it and says, well, no, Paul, the C is a control and the T means something else. And it kind of told me that, you know, we are two people moderately intelligent who have looked at the same bit of data with two different conclusions. There I am running another COVID test thinking I have COVID, and my wife's telling me, no, Paul, you don't have COVID. This makes perfect sense, controlled and the T. Well, to me, C with a red line means C for COVID, red line bad, okay? So it was really interesting that you can take something like that. You can look at one set of data, and because your brains are wired slightly differently, you come out with two misaligned outcomes. And that's one of the challenges when I've found working with, marketing teams, is marketing teams by definition are creatives, and they want to create content. They want to create fact sheets that look great, that have the data set out in the right places, that have, the feeds from Morningstar or Broadridge in, up to date and accurate. And you've got fund distribution teams who are looking to raise assets. And the challenge is because the end goal is borderline, is so different, you get to a point where the activities become misaligned. And then, the constant friction starts to build. And the friction, it slowly builds, teams degenerate. I don't mean degenerate, people leave, people aren't happy, no one's aligned. But what I was trying to do in this webinar, a common problem that we've found over the last 20 years is how can we align fund distribution and marketing teams? And this is feedback that we get from our own clients. So our clients, ProFundCom as a business, we've been going for the best part of 20 years. We have a whole bunch of institutional customers. We have a whole bunch of hedge funds, asset managers, private banks who work with us. And we have been building, and we are all about how can managers with their marketing teams identify new investment and at the same time manage redemption. And we all do this through our digital marketing platform. We also integrate with CRM, so usual suspects. So that's a little bit about us. So where were we, where are we, and where are we going to go as far as marketing funds? Well, riding the wave of the previous, 10, 20 years has been, the B to B to C model, which is quite convoluted. It was all about asset managers, custodians, everybody, clearing houses, sometimes platforms, sometimes distributors connecting with the investor. And the challenge with this model, it was always working. The challenge is that one, you couldn't really compare one fund to another. The charges were hidden, not really transparent. And the other challenge was that everybody was taking a slice from the whole investment process. And then at the same time, there was documentation that had to be covered, there was jurisdiction issues, but it was because there was no other option, a bit like black cabs in London or yellow cabs, because there was no option, that's what the consumer had to deal with. And you had this quite successful for some, when the markets are doing great, but you had this slightly supplier-centric model. And as time went on, whether it was through, regulation, whether it was through changing behaviors, this model got challenged. And it got challenged because MiFID came along, increasing transparencies, and because ETFs became popular, because there is not that much active, investment going on. They're not active portfolios, and they also had lower fees. That also started to eat into this model. And the other challenge, which obviously we all know what came along, was platforms came along. And platforms kind of brought together distribution, the comparison, clearing settlements, and the custodian side. So what that kind of meant is that one part of the B2B to C model changed, and it kind of became B2C. But what the platforms became is they started to obviously become more kind of techy, more open API, more digital connectivity from that point of view. And investors were actually able to compare performance. They were able to compare fees. They were able to compare track records. So suddenly the kind of powers ever so slightly shifted towards the investors. And, and the investor changed as well. And what happened now, it would like, previously, I used to invest in a fund just because my bank had one. And I thought, yeah, that's a safe place for it. I didn't really need any kind of marketing. I didn't care about brand. I just kind of sent my money and hoped it did well. And as there was slightly, the move has become that, it wasn't just pension funds and institutionals and wholesale people that were being targeted as investors. It almost, retail customers like myself, we're kind of looking, okay, where else can I put my money? Because, the Halifax is giving me 0.01 of nothing as interest. And the model moved. The model moved again. And the model moved where the investor type became different. And the asset management side, where the more asset managers were trying to get into the direct consumer model. And that's kind of where we became today. So if you look at platforms that are available today from, Hargreaves Lansdown in the UK to Fundsmith, these guys have kind of digitized this part of, the investment process, the fund marketing process. And, when you think about where, managers are going, whether you're a big asset management house like the Avivas of the world, a mid-size, like Hargreaves Lansdown, or a smaller size one, and even if you're trading ETFs, this has become, the way to actually, increase your market share if you're kind of going down the retail route. But the trouble with retail, it's all about brand. And, I was out speaking to the guys at Amazon about 3 years ago, and I was just talking about Amazon and their competitor in the UK called Argos. And interestingly, I used to work at Argos when I was at university. And I just spoke to the guys at Argos and, before I spoke to the guys at Amazon, and the guys at Argos would say, oh yeah, we're going to smash Amazon. We're going to be doing things like same day delivery, and returns are going to be, we're going to pick the returns up. And I said, oh, that's great. Really interesting to know. Then I was at Stoke Poges, and I met the guys at Amazon, who's a friend of somebody I know. And I said, oh, do you know Argos are doing this? And the guys at Amazon, the two guys there, they said to me, oh, they may do, but we don't really care about that. And I was kind of interested. I said, no, what do you guys care about? And this is what they care about. I'm about to show you on the next slide. This is what they care about. Financial services. This is what should keep asset managers awake at night. The fact is that they are looking for a way to remove that whole intermediary process between an investor and an asset manager. And it's literally the Uberization of funds. And it's a little bit like when Uber first came to London, it was like, oh, that's quite interesting. Why didn't I think of that? And kind of walking with these guys, and they were kind of saying to us, or saying to me and my other founder, Pro Funcom, they were saying, well, yeah, because if we're the intermediary, there is no risk on our side because we've got all the systems to do this. And it was a little bit like, right, now I know how these people are thinking. And if you're an asset manager, if you're a fund manager, and this doesn't make you think, okay, this is what the future looks like, what should we be doing? Well, it's interesting. McKinsey actually have kind of picked up on this, and they've kind of spoken about, there are kind of 4 things that a fund manager should do to think about in relation to the direct to consumer model for fund market, for selling funds. The first thing is finding out a way to rationalize your cost structure. The second thing, which I'm going to talk about, is how do you do marketing? And this is all about the alignment between marketing and distribution. enhance your presence in sectors that you may not be in right now, and using digital tech to engage with, with your funds, with, your custodians, and your fund platform, having a digital first view of your whole investment process. And that's all the way from data rooms to investor portals, all the way through. But what I was hoping to do today about is what we have spent the last 20 years on, is in marketing, and how marketing and distribution teams align. We've kind of come up with, the 6 things you need to be thinking about, and you don't need to do them today. You don't need to do them day after tomorrow, with Sunday, but Monday. But it's definitely things you need to tick off that you're doing. And if you're not doing, at least be aware of that. Now, there are products like ours that do this stuff. There are other products available that do what we do. But unless you get to a point where this is kind of baked into how you think about your marketing, how you think about what does, I don't even know what tomorrow is going to bring, but let's say, what the next 2 to 3 to 4 years hold for, fund marketing and raising assets, then, this is a great place to start to kind of build your strategies out. So the first thing we're going to look at today is integrating marketing technology. And the reason this is worth talking about is because marketing has a whole bunch of stacks. Marketing is its own technology stack, and that's why they call it MarTech. And the areas that you've got to kind of cover sit around your social marketing, your SEO marketing, your email delivery, the CRM you're using, the content you're creating, and the analytics. I've got a quick question that's come here. Yes, there is a recording, Lindsay. So there are all these various marketing elements. And so, when a fund manager says, oh, we're going to do some marketing, we'll kind of get MailChimp to send some stuff. We'll do a WordPress website. That really is not even scratching the surface, because what sits behind marketing is the social component, the SEO for your website, your email delivery, CRM, the content you're creating, and the analytics. And this all lines up behind brand awareness, demand generation, content generation. This all sits in this. So if you are on the distribution team and think marketing is just pretty PDFs, please think again, because there are lots of components that go in, and that means resource. It means people, it means training, and it means buying software. So that's the first part. Marketing is hard, lots of moving parts. And the next thing is you've just got to connect all this stuff together and build out what's, essentially known as marketing automation. So it's kind of CRM, and then the next step is marketing automation. And to pull this together, every time you take a component and you start connecting it all up together, yes, it's fantastic because you can do a lot more with a lot less, but there's lots to go wrong. And again, there's a cost associated with it. So because there's so many moving parts, the terror is, well, the person that we started with is not really qualified to do it, because it's almost becomes an engineering exercise. And when you start moving away from pretty PDFs and you move away to building automations, connecting various systems together, it does become an engineering discipline. And if your marketing team is not, I suppose, tooled with the right tools, they end up being software designers and developers using their tools as opposed to marketeers. And they start building reports in Excel and become Excel specialists. But by the time they've generated their reports, it's taken them so long, the reports are out of date and they haven't done their day job. And then more pressure is put on them by the distribution team. So again, it's just the awareness of the distribution team that marketing is hard if you're buying individual components. And products like ours, again, do all of this. Other products are available. But the real thing is to understand that the mind share of the distribution team has to be aware of these various components that the marketing team have to have built in. So it's not just the product, it's not just the SEO marketing, it's not just the content marketing, it's connecting all this stuff together. So we've got another question come through. Oh, my pleasure. There are a lot of moving parts. Now, once you've got all these moving parts together, the next thing is, okay, as a team, what metric should the team be measuring? And this is quite interesting because when you're measuring, there's a real danger about measuring, because there's a famous saying, you become what you measure, right? And as a fund distribution team, well, how are they measured? Assets raised. So everything a distribution team is doing is all about the assets they're raising. While a marketing team can be a bit, nebulous. Brand awareness, click-throughs, traffic on the website. That's fine, but how do you convert that into actual assets being raised in the business? And on the flip side, monitoring money that's potentially from investors that's walking out. So what I've done is I've kind of listed a whole list of things of where you can actually track and add a dollar value onto the marketing activities and analytics that you're collecting. And, for your website, it's around newsletter signups, gated content like white papers, things like your investor portal that you've got, creating your fund center, getting that data in one place is incredibly, incredibly useful for marketing teams. And that, as I'll show you as we go through this webinar, helps the marketing team demonstrate to the distribution team the impact they're having on raising AUM, because you can correlate all this back. So that's website engagement. Email engagement is around emails opened, emails read, technology that shows you if emails have been forwarded, if fact sheets in attachments have been opened, how long have they been open for, which pages have got the most attention, if you've got a data room, what content in the data room has been accessed by prospects. Having that information to hand, again, with the analytics, can surface some really critical information. Event information. So if you're running online, offline events, you're doing investor calls, you're doing, a manager commentary where they're on video, whether it's a recorded or a real-time event, knowing who's attended, who's registered, people who've invited other people, people who've been on the replay. Again, you're suddenly collecting a lot of data based around, content that you're creating. And finally, the social engagement is viewed, liked, who's commented on your content, and who shared your content. So these are all analytics that the marketing team should be thinking about collating. Now, once you've done that, it's then to work out from that data, who are the people you should be targeting. And this is the difference between the reporting that a distribution team look at and the reporting that a marketing team look at. So in a traditional world, marketing teams look at, again, website clicks, how many people have liked our post, and leave it at that. But what the ultimate end game is, and this is what I'm demonstrating here, is the ability not only to see, and I'll let this slide percolate, at the top level, not only to see how your digital channels are performing using the classic marketing metrics, which I've just demonstrated previously, but also for the sales team to be able to drill down into that data and actually work out, okay, based on all our behaviors across all our marketing channels, who are the people I need to talk to right now? And this is where, you can categorize content on, not engagement, you can categorize engagement on your various channels into kind of these 4 areas. Now you can have as many areas as you want, but these are the 4 that our 200 odd users have found incredibly useful. So the first analytics is low-hanging fruit. So who are the people across all your digital marketing real estate, website, social, portal, emails? that have been engaging with you over time, but no one has spoken to. So that, again, for the distribution team, incredibly useful information. Cross-selling, again, a very, very powerful report to have. These are investors of your fund that are looking at products that you have that they're not invested in. You know, the classic, you know, upsell, you know, the classic, you know, you buy a ticket for your favorite band and there's, you know, various options like, you know, the upsell is, you know, you get the t-shirts, you get the signed memorabilia, you go and you can meet the band and stuff like that. I know I'm kind of trivializing, but I've just bought some tickets and I just thought, haha, you know, another upsell opportunity. The other thing is looking at redemption risk. You know, which of your investors are not reading what you're sending them? And finally, marketing alpha is all about who are your people in your digital pipeline who have been dormant for the last 6 months, but are suddenly reading what you're sending them. And the reason this is the end game, is because it basically takes, you know, the 5 stages of digital marketing, which is brand awareness, demand generation, content production, engagement, and analytics. So this is the sum total of all the marketing activities you've got to go through to get for the marketing team to deliver this to the distribution team. And the way this looks is very much, and this is actually a real example I'm showing you, so this is actually running for a client of ours, where you can actually see all the marketing activity in real time. You can see, you can see inflows to the business, which campaigns here have been the best, the geographic spread of where the content's being consumed, and more importantly here, who are those people? So I know you know, the reason why this is such an important part of the bridge between digital marketing and the marketing teams and the fund distribution teams, because in many ways it takes all that marketing budget and aligns it with the distribution budget. So you would know dollars spent in marketing has a direct correlation with the assets being raised. And clients of ours who use our product can actually see the whole journey of a prospect who's come in via a downloaded, you know, fact sheet or a downloaded commentary piece all the way through to the point that they invested, which has been, you know, in many ways the nirvana, the nirvana of, you know, marketeers, right? Is that thing where I know where half my marketing budget goes, just don't know which half is effective. So there we go. So that's really, you know, looking at, you know, the gaps in reporting as it stands today and which need to be filled, because no fund distribution team really cares about your Google Analytics. What they really care about is, you know, what have you done for me lately? Who are the people I need to call? So that's, you know, that's the third part on this 6-point series. So the next thing, and this is probably the simplest part, but probably the hardest to implement, is it kind of goes back to how do you improve communication? And as I kind of explained to people before, you know, you can look at one set of data and have 2 different results. Again, you know, marketing teams speak different language to sales teams or distribution teams. And it's really, we did a webinar about 2 years ago on this, and we had somebody on from Ketosis, and who was basically talking about the really important thing is for sales teams to be part of your marketing team in meetings and in strategy, and exactly the same. So, you know, a salesperson will look at visitors, page views, comments, clicks, users, reporting, revenue. And at the same time, you know, the marketeers go to the sales team. And, you know, and sales team will be talking about AUM, fund performance, feedback, asset allocation, you know, files, new AUM that's come into the business. So it really then gives both teams the context for working together, speaking the same language, and even, you know, I mean, we don't have that many water cooler moments anymore, but it really just gives people that common language. And it really is interesting having common language, because cults, and I'm using the word, doomsday cults or whatever, or groups have their own language. And whether it's football, so like, I can go to a 49ers game in London and we are all talking the same language, the same vernacular. And that is when you've got disparate teams, it's almost, how do you bring that together? And the challenge there is bringing the vocabulary together. So, when a new starter starts in the marketing team, do they really know what AUM is? Do they really know what asset allocation is? Do they really know? And that's really, really important. And I know White Marble do an excellent course on this. And on the flip side, sales teams, do they understand how important the brand is? Do they understand brand awareness, demand generation, and content creation? And are they, because they understand that, when the marketing go to them and say, right, we need a piece to camera, they are actually willing and happy and delighted to do that, instead of, finding every reason under the sun not to. So stop working in silos, work together, be part of the same team. And if someone at C-level, is to help them understand that whilst, marketing used to be above the funnel and sales used to be in the funnel, now the model is different. Sales and marketing are literally aligned together. And, my ultimate dream is when, marketing. So, when I started in marketing, the first, when things went bad, I'm saying bad, like almost like they are now, the three things that went were business class travel, biscuits in meeting rooms, and marketing, because marketing was considered dispensable. Well, actually, marketing, what I wanted to be seen as, is a core function of a fund. So work together on this is really, really important. So we're almost there. This is something that's really, really new. And this is, what is an ideal investor profile? And why is that so important? Now, the reason why, from a marketing point of view, is so important, because this is where the go-to-market strategy comes from. And this is where marketing teams really need to understand from the distribution team, who is the ideal investor? What is their profile? What channels do they like being on? What content do they consume? What events do they go to? All that information is critical for both teams to succeed. And the ultimate question that, when I workshop with our clients and with our prospects, I ask them to say, right, what is your fund narrative? What is your ideal investor persona, profile persona? You say tomato, I say, something else. And who are your top 100 investors? Who are the people you're going after? It could be 100, 200, 100,000. Who are these people? And I would tell you, without fail, nobody knows. Nobody. And, we work with the likes of PIMCO, and we work with the likes of Brevin Howard. We work with the likes of, boutique managers. And they will say something that they are comfortable with. They'll say, oh, no, we target endowment funds. Okay, great. Which ones? What type? Who's the person you're talking to? Do they have a color preference? What kind on the disc profile? Where do they sit? Oh, we don't know. We don't know. We haven't thought about that. I says, be surprised that a small amount of time, this actually costs no money to do, by the way, to actually spend time, who you are actually targeting, builds out your go-to-market strategy. And, the great thing about really successful go-to-market strategies that I've seen is they very quickly work out, based on their fund narrative, their personas, and their targets, what things not to do and what things to really, I'm thinking of the word, double down on. What things to double down on. And then, iteratively test which campaigns are working and which campaigns are not working. What themes are working, what themes aren't working, and building this out. Now, what I would say, and as a quick, answer to this question, from all my research, my own experience, from my own, well, I say my own ProFundCom's engagement with our customers, was the most powerful digital channel after email is LinkedIn. And we are actually building out, a LinkedIn campaign manager where you can actually build out building out automated direct messaging. And that's quite useful. So, when we do talk to customers around, okay, very, very quickly, what's the best way to test our audience is go to LinkedIn Sales Navigator and kind of build out campaigns from there, because that is actually a really good place to actually see how many people are actually engaging with your message. And you can kind of tweak that as you go along, but it needs discipline. And that's something that we do talk about a lot, is that all this stuff is pretty useless unless you've got scheduled content going out. So that's go to market. And like I said, if you just do one thing at the back of this webinar, and anything that I've done on my monthly webinars, my weekly thought pieces, get to know these 3 things in your fund. Okay, and here it is. So just for the last time, this is go-to-market strategy. Build your narrative, build your brand, create your demand generation through your content, build out engagement through all these social channels, and with products like ours, bring in the analytics so you can actually help, as a marketing team, the distribution team with people they need to target. This is really the model that we follow for all our customers. And, we do points 3, 4, and 5. We leave points 1 and 2 to people's own marketing teams, because that's not the world we operate in. And it's I actually think 1 and 2 are probably the hardest thing to do. So there we go. So building out investor profiles, why they're important. It's point 5 because it is the most important thing. So, it's one of those things, I've always learned when people tell you stuff, it's the last point that they really wanted to make. And, with the ideal investor profiles, it is literally the most important. However, we added 1 more. And the last one is about nurture campaigns and lead scoring. And this is all about, once you've collected all this data from your website, your social, from downloads, from your investor portal, is the ability to take this data, assign it a weighting or a score, and then based on that, decide what action you're going to take. And again, this all feeds into this single page where you can, marketing teams from all that marketing activity, if you can notice there's some stars on this, which is basically how engaged a contact is the ability to actually say to the sales team, here are the people you need to call, but we're not just randomly telling you who these people are. We're basically saying, based on their digital activity, we've decided, based on an algorithm or based on some very basic weighting, that the people that you need to call are these people. And nurture campaigns, like I mentioned earlier on, is all about planning. And because our business is all about compliance, just because you've got a piece ready, well, you've got to decide the piece, you've got to get the piece written up. And if you're using a manager, you've got to get into their diary. If it's the camera, you've got to arrange, the camera crew, or, you can actually do it quite easily using some basic tools that you can buy on Amazon with your web camera. You then, not only that, you've got to get the content approved. Once you've got to get the content approved, you've got to get it distributed. Once you've got it distributed, you've got to get the analytics. It's a lot of work, and you can get quite overwhelmed. So what, we have a sampled spreadsheet that just allows you just to plug in the content when it's done, when it's ready, when it's good to go, and all that kind of stuff. And that is probably, once you've built out your narrative and your ideal investor profile, having a content plan laid out in Excel that you follow to the T is absolutely critical. And the one you're looking at on this screen is actually our one that we have. And our content is already ready for September 2023. So we've already got that staked out. So in many ways, it's that question that, Phil Knight from Nike got asked, which is a really good question. What's it like, Phil, running a great shoe company? And he turned around and said, we're not a shoe company. We're a marketing company that sells shoes. And that's always kind of stuck with me. And in many ways, you know, are you a fund company selling funds, or are you a marketing company selling funds? And, you know, ultimately with any kind of marketing, is the winner in marketing is the one who has the best story. And whilst if people talk about performance is the one that wins, actually no, performance is third on the list. Number one is, you know, investment strategy. Number two is attitude to risk, and thirdly is performance. So that's just a freebie from me. But so yeah, so don't underplay distribution teams, don't underplay the value of a great story for marketing. Okay, so that's planning, and that's it. That is us. We're done for the webinar, and that was a lot of content to go through. So thank you everyone for staying on. And we've probably got about another 10 minutes now. Or if anyone has any questions, we will send a replay out. And I've got a book on the subject. Second edition is coming out. It's Marketing to the Invisible Investor. And the reason the investor is invisible because they're all on digital channels. If you ask me nicely, I can send you a copy as well. So yeah, happy to take any questions if you've got any right now. Okay, I've got one question has come in on what platforms bring this all together. Well, the interesting thing is there's no real one platform. And when I mean this, I think you're meaning email, digital, email, investor portal, and all that, and CRM. The answer is no. And that's the reason why, if you remember, there was a slide that I put together, which was, if you just bear with me, I hope you can see it. This is a bit of a challenge for me. I don't know if you can see this actually. I'll pretend. Let's have a look. Is this the slide? Right. Oh, I've stopped my screen share. Bear with me. Let's give it a go. This one here. There are lots of moving parts. Now, the good news is this is what we've spent our time at ProFuncom building. At ProFuncom building is the ability to have this all in one system. And the great news is that because you've got this in one system, all these analytics that I spoke about earlier on, which a marketing team can deliver to the sales team, is all available in one place. Now, you don't have, you can buy our marketing automation piece, you can buy all different bits that we have, but in essence, most people have ended up, because they haven't bought us from scratch, they just buy different components, and we then help them generate these reports. But we have our own platform that brings marketing automation, CRM, investor portal all together. And we've got, 200 people who can say how useless we are. Fergus, do you think LinkedIn understand the different culture of UK financial market versus other industries in terms of how to get the best out of Sales Navigator? The trouble there, Fergus, is that the categorization is very broad. So it'll just say financial services, and within that, it'll say investment management, doesn't have hedge funds, doesn't have private wealth, doesn't have any of that. That's a really, really good question. So the way around this is to actually not do it on title, but to do it by company. So if you are in the process of, if you target private equity, if you target a particular type of investor, then you're able to build out within LinkedIn their personas. So, but you have to use the filters that Sales Navigator give. So one really good way to look at this is to say, if you are targeting a particular investor, and let's say they're a retail investor, what job title would you expect them to have? What age would you expect them to have? What part in their career do you expect them to have? What organization do you expect them to have? And how long in employment do you expect them to have? If you do that, and this is all going down to behavioral science, which is just another webinar for another day, it gives you the ability there to actually say, okay, fantastic. I now know my persona. I can start to build out the people I want to reach out to. Yeah, so that's what I can say. Sales Navigator, I have to say, I mean, I'm not disagreeing with you, Fergus, that it does not understand segmentation. You don't even have to be in a financial services. You can be in any market. And that kind of segmentation, again, is down to personas. And what's really, really good with Sales Navigator is you've got the ability to break out those personas, but you've got to kind of go through that, the kind of boring stuff, which is, the narrative, the ideal investor, and who they are. So, but what you can do is use products like Zoom Info that can help. Another really great way which I've found out from some of our clients, is that they use a website called Directors Deals, where they look at which directors have taken money out of their own companies, so which means they're liquid. And there is another corporate action website, which I can't remember, which actually shows when people in businesses have had a liquid event, so who have got money to invest. So that's kind of one way of looking at it. There's another database for high net worths, and I know the guys at Family Wealth Report sell this data, and I can't remember what it was called. I think Victoria, who's on the call, knows what it's called. And it's a guy called Alistair who runs that, but she can let me know on the comments, hopefully. All right, Fergus, yeah, no problem. Pleasure to answer that question. Anonymous attendee, are you going to share the event recording? Yes, absolutely. This is recorded. It's available on our website. You'll get a copy if you've registered, and it's on my YouTube channel as well. So, right, so we answered LinkedIn. We've answered, is this available in one product? Any more questions? Yeah, I've got one more question to come through. Let's see what this is. Jonathan, thanks, insightful, very reachable. Stay well. Well, I'll try my best. I'll try my best not to go to the Lion King or any theaters and potentially catch COVID. Okay, we've got one more questions coming. Got loads of questions coming in now. Highworth, that's it, Theodora. You got it. Theodora, thank you. Yes, Highworth. Highworth are the guys who have the database, and which I've only heard good things about. So fantastic. Okay, right. Well, I think we're at the end of our questions. I will be sending out a replay of the webinar. Hopefully you can join us at our next one. We have them on the last Friday of every month. And without ado, have a great weekend, everybody. Thank you very much.